Hello and welcome to Hot Commodities. I'm Anisha Gupta and the top headlines on the show are: the gold prices rally for a fifth day at its highest level in nearly 3 weeks as softer global equity markets prompt investors to tap the asset's safe haven qualities. The Brent crude prices edge around 107 a barrel, bouncing back from its biggest weekly fall in 6 months. But the restart of the key Libyan oil field could limit the gains. A strong dollar and sluggish domestic markets dent the sentiment in the rupee. The currency ends the day at 62.31 to the dollar. Well, the international gold prices have rallied for a fifth day to its highest level in nearly 3 weeks. Softer equity markets have prompted the investors to tap the asset's safe haven qualities. The metals rally comes despite a strong US dollar and bullish comments from the US Fed on US economy. The gold price is on your screen just about 12.40 and nearly 0.25% of a gain coming in. The Brent prices in the meanwhile also have seen some strength. The previous week was the worst in 19 months coming in for the NYMEX, and the Brent prices also have seen the biggest fall in 6 months. But it is the start of the Libyan oil field that could limit too much of gains into the markets. New output from Libya is expected to start coming into the markets. It also is the El Sharara field which has resumed over the weekend as protesters ended a 2-month blockade, which is leading to more supplies in the international markets. Let's bring on board then Kishore Narne. He's Associate Director, Head Commodity and Currency at Motilal Oswal. Also joining us is Vijay Bhamwani, who's author and CEO at bsplindia.com. Vijay, hi, let's start with you first. And what's your sense now coming in for the crude prices? After 6.5% of decline in the previous week, we have started this one on a steady note.
Manisha, I would draw your attention to last week's levels that I gave about of 5,880, and today I see a low of 5,875 after before crude bounced back. Now 58.80 is a minor support which I think needs to be monitored very carefully, but an even more meaningful support is at 5,830 levels. If that level holds, the probability of a rally to test the 59.60 or maybe even 59.85 level is quite probable. But the counter does remain under pressure, and I think one needs to be fairly calibrated in taking fresh positions, especially on the long side, which needs to be monitored, and long positions will be safer to take, ironically, only above 5,940 and not otherwise.
Vijay, also, how are you reading the gold and silver movement now? Because the previous week saw some gains. This week also has started on a positive note here. Would you say that the bears perhaps have turned around and we are looking at some volume buying here?
I don't think so, Manisha. I think it's early days yet. And what you are seeing is a technical rebound. But there is no sign of exuberance. Volumes are not warranting that there's any rush to buy. There is no feeling that I get on the screen watching the tickers that traders are feeling that if they do not buy today, it may be too late tomorrow. Unless that kind of a rush to buy comes in, I think a sustained upthrust might remain elusive. So at this point in time, I would categorize this as a technical pullback rather than a total turnaround.
Also, Vijay, how would you look at the base metal space then? Because the data has been quite mixed, especially from China this time around. We've seen a decline in the numbers there. Do you think that would weigh on the prices? Also, the kind of run-up that we saw in the previous week, do you see that following up?
I don't think follow-up support is coming in a hurry, Manisha. I've always maintained that the end of December buying was mainly attributed to hedge funds, which tend to be the largest player in the commodities market in all the category of players that are there in this financial market. And the kind of run-up that you saw in the end of December was more to do towards NAV boosting rather than a sustained kind of an upthrust. You're absolutely correct. Concerns on China remain extremely heavy on the market, and any kind of a rally is likely to run into a wall of selling, maybe percent and a half from here, almost universally. So I think rallies in aluminium are capped to 110. In case of copper, I think 469 to 470 will act as a hurdle. In terms of nickel, I think 870 odd levels will offer a great deal of resistance. Lead, similarly 137 will act as a resistance, 128 in zinc. I think unless these levels are overcome very forcefully with a huge spike in volumes and rise in open interest, I think we are headed lower.
Kishore, what's your sense really coming in for the base metal prices? Because that's the only sector today which hasn't seen much of a boost coming in. How are you viewing it and what fundamentals do you have in mind?
Good evening, Manisha. I think again base metals are slightly overbought kind of a scenario at this point of time. Probably things like nickel, lead, and zinc all are poised for some more downside. Though copper appears to be slightly resistant on the higher side, so I think still we might see some kind of a sell-off in across base metal pack. So copper towards 461 kind of levels, nickel again 844, 845 could be possible downside supports, and lead zinc towards 133, and zinc around 124, 70 could be possible downside levels for the day or two.
Kishore, also, how would you look at the other set of metals, which is the precious metals? And while the dollar is strong, we still have seen Asian buying continue there. Do you think the high prices would deter too much of a physical buying? But having said that, do you see more strength?
I think short term you can see some strength. Is again a pullback kind of a scenario at this point of time. I don't see any a macro trend reversal either in gold or silver, because I still believe that probably we need to go further on the dollar levels, especially on gold 1080, maybe 1050 kind of levels on international market. So I think a short term pullback could be possible, especially in gold towards 29,250, 300 kind of levels, and on gold, and silver probably 45,500 to 600 kind of levels could be possible. So it should be a simple technical bounce back, not a serious one at this point of time. So overall macro downtrend is on still in bullion as well.
But how would you read energy then, Kishore? Because that is an area that has been very choppy. While we've ended December on a very good note, Jan hasn't started so well, especially the previous week with more than 6% declines. How are you looking at the fundamentals?
I think there's a significant amount of churning of positions going on in global markets, and also the markets are not being very liquid. If you see the OI levels are very low, and even the day-to-day trading volumes are also not very attractive. Because a lot of banks and funds are out of market, and also we've seen that Libya coming back onto the production map, and some of the European refinery issues which have been sorted out. So I think there's a significant change in overall sentiment. So we've seen a sharp correction, though I expect another $1.50 downside on, especially on WTI, not maybe on Brent. So 5,880, 870 kind of levels could be possible on the lower side. But I think it's time to be looking to accumulate at lower levels. Maybe again 5,800, 820 kind of levels should see some good amount of support coming up.
Okay, so that's the scene about the non-agro space, buying into precious metals, even energy for the intraday markets. There is the view coming in from our experts. But with that, let's go for a break. When we come back, we will focus the agro commodities and strategies for your trades. Welcome back. Let's talk about the agro commodities now. It has been a mixed first day of this week there. While you have seen some decline coming in for wheat and sugar, that really has continued. Some of the spices seem to be doing good. The mentha oil prices are down. And let's get the edible oil space on your screen first, because edible oil, of course, seems to be following rupee there. The international cues as well. And we have seen some choppiness coming into that trade. Vijay, how would you look at something like soybean and soy oil, where we have seen some profit taking come?
Manisha, I think edible oils are in for some amount of further declines. Crude palm oil is very well supplied in Indonesia and Malaysia. And the prices of crude, by crude I mean energy crude, is down. So the viability of biodiesel and therefore more demand expansion from the automobile sector is likely to be constrained. So I think crude palm oil below 540 seems like a fair probability. Similarly with soya oil also, I think a percent and a half decline would be in order. And if the rupee was to strengthen or even consolidate in the face of falling crude oil prices, I think edible oil prices are headed even further down.
Kishore, what's your sense coming in for mustard prices? Would you also count that in the negatives when we talk about the edible oil space?
No, I think mustard have been an underperformer compared to soya. So I think at this point of time there is a little bit of relative strength as compared to soya. So I would like to buy mustard around 36.15 kind of levels with 3580 as stop loss and 3675 as a target potentially for a day or two.
Kishore, also how would you look at the pulses space, because chana has been a gainer as we started 2014. Do you see the steam strength continue?
I think this commodity has a very strong bull trend, maybe coming in the next quarter or so, or maybe going towards June, July, probably, because this is one commodity which has been well below its production cost, and though it is very hovering around its MSPs for some time, but as I speak to the people up country, the farmers are not really interested in sowing chana because it's not really commercially viable at this prices. So I think there should be a shortage of crop, and probably we should see the prices going back to 36,000-3700 maybe down the line 3 months. And short term also, I think one can buy with 2990 as a stop loss and 3070 as a target for short term.
Okay, so those are a couple of buys coming in from Motilal Oswal on case of mustard and also chana there. But Vijay, how is mentha looking to you? Because that commodity really hasn't run up, made use of the seasonal demand at least.
Absolutely right, Manisha. I've always talked about how if it was 2011 or 2012, mentha oil should have been trading above the 950, if not 1000 rupee levels. And I also remember talking about the 820 odd levels as a last mile support. Now we are within kissing distance of that support being tested or even violated. If the prices were to settle below 820, especially on a closing basis for 1 or 2 trading sessions, I think the bulls are clearly on the ropes. Prices are likely to breach even the 800 mark. So here, absolutely no bottom fishing or bargain buying is advocated.
All right, so no buying call coming in for mentha oil prices. But with that, let's go for a break. Kishore, thank you so much for joining us with your strategies on the agro and non-agro. When we come back from this break, we will talk about the currency markets. The strong dollar and sluggish domestic markets have dented the sentiment for the currency. The rupee ends the day at 62.31 to the greenback.